Good morning. We are glad that you've joined us here on RFDTV. And by the way, it is National Radio Day, so thank you very much for joining us on Rural Radio. That's channel 147 on Sirius XM. Well, last night on the overnight, we saw some strength over in the corn market and the soybean market. Some of that strength started to wane just a little bit going into the pause for the day trade. Wheat, on the other hand, was weaker. We've got September corn this morning going into the day trade right at steady at 364 1/4. December up 1/4 at 379. Over in the soybean market, that's where more of the strength was. September soybeans up 11 1/4. November up 11 3/4 last night at 904 1/2. We've been as high as 907. September Chicago wheat down 9 1/4 cents, 551 1/4. September Kansas City wheat down 8 1/2 at 556 1/2. September Minneapolis wheat down 10 1/4 at 598 1/4. And to start the day out, it looks like cotton could be a little bit mixed with a little bit of strength. Let's go to the telephone here this morning. Rich Nelson, Allendale Incorporated, McHenry, Illinois, joins us. Rich, it could be another interesting week. We've got a crop tour that's taking place across the nation here, and we've got rain falling this morning in a lot of the areas where it might be a little bit too late for corn, but certainly will help soybean fill.
No doubt about that here. A lot of people will point out that the first portion of this month may have been a little dry here, but now seeing a good resurgence in precip that will certainly take care of some concerns that people had here recently showing up. But on top of this, we also have our trade negotiation issues going on this week, and also got to point out China did accept their third cargo of U.S. soybeans here recently, so that's also a positive side too. So a lot of bearish news lined up with the weather, but on the other hand, there are some supportive issues for today's discussion too.
This wheat market here showing a little bit of weakness here, and up to this point that had been a market that was kind of leading the pack.
It's certainly right. And in fact, most of the news for wheat is still generally supportive right now. Continued declines posting for many countries. In fact, the latest one out here over the past weekend was Bulgaria. So we are still seeing weather concern, but its ability to impact prices is maybe waning right now.
I want to go back here and talk about soybeans a little bit, because there's been a lot of talk about, maybe some resistance over here around this $9 mark. But now we've got the November soybeans kind of pushing that just a little bit. And if we would continue to go into this day trade with this kind of strength on the heels of that news, does this market set itself up maybe for being able to surpass and close above this $9 level?
It certainly could, and that would be a very important psychological-based victory. Not quite taking out the end of July little resistance point of 922 1/4 on that November contract, but no doubt anything past $9 is definitely a slightly better tone in terms of psychology here.
What about over here in the corn market? Maybe a little bit of strength here just because of exports, or do you think that could be knocked back if Crop Tour comes in and agrees with USDA's number?
And that's definitely a very big question here. That will certainly be a topic of conversation this week. Also, Allendale's nationwide producer survey is a 2-week-long effort. That starts today as well. So a lot of fundamental-based news will be hitting this market here very shortly here.
We're looking forward to hearing some of those results. Rich Nelson, Allendale Incorporated, on the line with us here. And when we come back, we're going to continue our conversation with Rich, this time talking about the livestock. That's straight ahead here on the Marketing Report. Let's continue our market conversation this morning. Rich Nelson, Allendale Incorporated, McHenry, Illinois, is still here with us. And, Rich, we're kind of kicking off a brand new week here, but by the end of the week, after 2 p.m. Central Time, we'll have the results of the cattle on feed report out from USDA. Already starting to see some early numbers here. It's almost setting up as if maybe some traders in this market have seen numbers similar to this before, and if the market kind of comes in where they're expecting, could we see many fireworks?
We certainly could. One thing which has been a problem here for us is this idea of, or concern and question is about this end-of-year beef supply waiting for us. And certainly these numbers, which will impact end-of-year numbers, and certainly in the first quarter, will have a lot to say about that. If we do have another month of higher than last year placements, this would now be 3 months in a row, and certainly maybe disrupting some of the supply forecasts that people had for the end-of-the-year numbers here.
Now, am I correct to also understand that there will be a cold storage report in with this one?
Exactly right. In terms of these numbers, as far as the cold storage, this actually will be out, from my understanding, on Wednesday here at 2 o'clock. So we'll still have all these numbers put in together with the cold storage guesses and cattle and feed guesses. But like I said, cold storage Wednesday, cattle and feed on Friday.
Well, let's talk about the technical side of this trade, and we'll start here in the live cattle market. If you look at a live cattle chart, are the technicals starting to show maybe that we could maybe even kind of firm this market, or at least call this week maybe steady?
Certainly could. Certainly in terms of the general uptrend, which is still in place for all these contracts on the live cattle end. And last week's push down didn't really violate that uptrend very much. So in terms of the trade focus, still good news lined up for the cattle, at least on the trend side.
Okay, that was the live cattle. What about the feeder cattle chart? When we check one of those out, what does this tell us?
And that's where we have a little pushback going on some of these contracts right now. Also keep in mind here, on a seasonal basis, feeders typically peak out in the month of August, but we still have some actually price premiums in these October, November contracts as well. So I think maybe on the feeders might be just a little overpriced in some of these deferreds here.
I understand that maybe China has discovered maybe a third case of their African swine fever again here. When you look at a hog chart, are the technicals starting to price some of this potential trouble in?
They certainly are, and maybe doing a little more than they actually need to, but I'm not going to argue too much here. Definitely in terms of any type of rebound we had like late last week is certainly more than welcome in this industry. But exactly how many cases of swine fever may be actually seen in China, that's certainly a big question over these next few weeks. The market's probably going to overblow the actual impact of it, but we're not going to argue for right now.
All right. Rich Nelson, Allendale Incorporated, here with us. And Janet, we're going to open the markets in about 6 minutes or so.